Hello. So good evening, guys. You're once again welcome back to my channel. So tonight is going to be a quick one. This is an addendum or an add-on to what I explained yesterday in my video and the update I gave about volatility 75, what we're going to expect to happen this week. All right. So basically, um, this is the volatility 75. Within the week, I told you this was Friday, Saturday trading, and this is Sunday, Monday, and then today Tuesday. Okay, so basically, I told you about the fact that we're looking at this gap here, and then this gap here. Price was going to fill. That was on Saturday. I told you about the fact that price was going to fill in this gap, and price actually has filled in or closing on this gap, and then it moved up here. So what will give you the clue that price is not going to go up to clear this high or to clear this fair value gap resting in here, the sell side imbalance and buy side inefficiency? What will give us the clue that price is not going to clear this area? Okay, and the strategy that I'm going to teach is the most advanced strategy you would ever find to trade volatility 75. Okay, yes, this is one of the advanced strategies. Okay, so I'll urge you to go and watch yesterday's video on other blocks. Okay, if you haven't watched, I'll urge you to go and watch that video. So quickly, let's go down to as of yesterday, which was Monday, when the market traded into this area on this price point, what gave us the edge that we're going to look for to head back into this or close in into this fair value gap or closing in this buy side imbalance and sell side inefficiency. So now if price has efficiently be delivered, it has been delivered here, and then this side too, we have this side being efficiently delivered. We are looking at this area rather. Now let's go down to 1 hour time frame. So for those of you who are in my closed group and cycle, I shared the signal this morning on where the market has got to and what we're going to expect. Okay, and basically price really transpired exactly as we expected. All right, so let's beat our chart down to our 1 hour time frame and then see how the market felt, and then we are going to learn from this trading strategy and we're going to apply it in our trading, and we know that we're going to be successful trader. So if you are a trader of volatility 75, this is one of the best trading strategies you would ever use. Okay, this is one of the best trading strategy that you ever use. All right, so now let's go quickly to the chart and see how we are going to go. All right, so beautifully we are on the chart now. This morning I told those in my cycle when price was around this area, around 10 a.m., 9 a.m., it was around this area when I saw, so it was from this point that I noticed what has happened on the market, and I was looking at a good time of the day for price to give us that entry. All right, and this video or this analysis or this strategy is in conjunction with what we studied in yesterday's video. And as I told you in yesterday's video, the other blocks that you will barely find other blocks on all time frame. You will really find other blocks on all time frame. Okay, so now let's look at where price began from. So price was actually on the 1 hour time frame. Price moved from this low to this high, and then it came down to this low, and then it moved all the way to form this high here, and then it came down to form this low. All right, and then let me quickly pull down my chart. Sorry, undo for the last one. Oh, I would rather have to reduce the size of the chart. Okay, so let me undo for this and this, and then we'll quickly draw again. So price moved from this point all the way to this. You can even ignore this high and use this high and then this low, but because there's a lower low here, so we consider this high. Okay, this high, and then price moved into this high in here, and then it rallied down, and then it moved into this high. So in a normal sense, what do you see? Price is forming higher highs. Okay, so we can clearly say that the market is trending higher, or the retail mind world says that price is trending higher. So our price is in a bullish trend. Okay, we don't draw trend lines to indicate anything here, just to have the idea that price is trending upwards, forming higher highs, and it is forming higher lows. Okay, all right, so basically we get to this point, and then now watch this. So the highs, so for instance, we have 1, we have 2, sorry, undo, we have so I was trying to indicate, let me just quickly do this. We're trying to show you that this high and this high, which one is higher? This is higher than this, right? Great. So the next one which is formed is always higher than the previous one, and then the low too. The next low that is formed, this is formed, is higher than this low. Then another one which is formed is higher than this low. Then the next one which is formed is higher than this low. Now watch this. Now price gets to this point. What must price necessarily do? Price must necessarily trade above this area into this area before we see maybe price should come back into this area and not come below this and continue, right? But here is the scenario, price didn't do that, but rather when it got here, it didn't trade above this high, and it broke down. Price broke down. So this is an indication that price is ready to reverse or to change course in the trend that it is in. So this is it. So you see price moving this way. Now I want to draw it beautifully here. Okay, price movement this way. Then you see something like this. Then instead of price continuing higher, it doesn't continue higher, but it continues, and then it gets to this point. Then it's unable to take the high here, but then it breaks lower. So you notice this. So this point, which has been raided, even if it is raided by a pip or just a point, it is still a raid, or it is still a change in course. So what we usually do is that we wait for price to reverse into an area where it's either going to meet any of the PDRs, either it is going to sweep number 1, fair value gap. If you don't understand what fair value gap is, go to the old videos, you'll find fair value gap I posted a week ago. Or it's going to trade into an order block. So the order block is what we'll take our time and explain today. Or it is either going to trading into a mitigation block. Okay, so any of them. Now in this instance, we are seeing an order block. So we are expecting price to trade into an order block. An order block which has been formed around this area, okay, is what we are expecting that price is going to take. So there's an order block resting inside this area, and then we are expecting price to trade into the order block before it finally breaks down. So this is a whole strategy. Price is trading or is trending Then what we wait for is that we see price wanting to continue to rise higher, but it's unable to continue to rise. It's unable to continue to rise higher, but then it breaks lower than, or it forms a low which is lower than the previous low, which has violated the rules for having or the rules for saying that we are trending higher. Okay, so in a trending a market which is trending upwards, the lows that are formed, the current low is always higher than the previous low. But now look at this, the current low that has been formed is rather lower than the previous low, so definitely we have changed course. Now we wait for price to trade into an area, and that area that we are looking for today is called order blocks, and that was what I explained in yesterday's video. So this will be an add-on to yesterday's video. Okay, beautifully. All right, so now let's clear our chart. So we've seen price move from this point to this high, to this point, all the way up this way, to this point, all the way up, and then it continued and does that, and it does this way, and then price broke down before it traded back into this area. Now yesterday when I was teaching, I told you about some things that really reinforces other blocks. Okay, there are a few things that reinforces other blocks. All right, and these are signatures that shows us that okay, this is a perfect area where orders have been placed, or a perfect area where the not the retailers, where the market makers, or where the institutions or institutional orders have been placed. Okay, so now let's look at the area where we are talking about. Okay, so quickly look at this area. So this continuous order block, or this continuous bullish candles up here, now form our order block. So look at it, when we had this continuous bullish candles here, and then we had bearish candle breaking down, what was the confirmation that I gave you that to confirm that it is actually an order block? Number one, I told you that it has to, it's not always the case, but here in this instance, we saw that it had broken a low, a long-term low, that which wasn't supposed to be broken. It has violated it, which makes us understand that, or which gives us the confirmation that yes, indeed it is an order block. Okay, good. So we are considering all these continuous bullish candles here as the order block. And yesterday, so for instance, this is how the order blocks are formed. You have markets trading this way. Let me quickly use my annotations. I'm still giving you more insight on the definition again. Okay, so this is how order blocks are formed. We have price trading this way. So bullish candles. Okay, so we have price trading this way, bull candles, another bull candle, another bull candle. Okay, then let's say we have a bearish candle, then we have another bullish candle. Okay, these ones, it may have wicks or not. I mean, just to explain for you to get the concept of what order blocks are. So this last bullish candle here, okay, this last bullish candle here which has been formed, should we have a reversal of price closing below, or candle closing below it this way, okay, and then we have continuous bearish candles now closing below. So let's say this is a recent let's say it's a recent low, or is a low that is a long term. So for instance, we were in a how do we call it, a bullish market, right? Yeah, we're in a bullish market, so we have price trading this way, and then it came down, and then it came down to this point, and then it went up, and then it came down to this point, and then good. So we traded up this way. So now imagine this particular kind of setup where we have continuous bearish candle breaking this recent low here. What it means is that this particular candle, this particular bullish candle becomes our order block. This was where institutions placed their orders, and then price rallied deep and then cleared the recent low. So this becomes our order block. Okay, what it means is that this is the place where institutions placed all their orders and they began to rally the price down, and this is where they made all their sales. Okay, so this is classified as an order block. Sometimes it can be two continuous bullish candles upwards, and then afterwards we have a rally down to take down a long-term low. Still, those two continuous bullish candles are classified as the order block. Okay, so in this instance, look at this. Sorry. So in this instance, we have our in this instance we have our the same example that I just drew. We have continuous bullish candles up before continuous bearish candles broke below it, and what did it do? It rallied down and it took down the recent low, okay, which is not supposed to be violated. It's a long-term low. It has been taken down, which means that this particular bullish candles here are the order blocks. So anytime we expect price to trade into that order block, what are we expecting? We are expecting that price will reverse after it trades in. Why did I draw the candle, or did I draw the lines considering only the bodies? Because that is where it has volume. You can consider the wicks as well, but more often let's look at where the volume of the traders. Okay, now one important thing is that mostly price usually trades into the mean threshold of the order block. What is the mean threshold? Mean threshold is the middle of the order block. Okay, so for instance, where I have drawn this continuous I've drawn this order block indicating the body of this candle, and that candle. Look at the middle of it. Right in the middle of it is where price actually reversed into, and then it bounced off all the way to this point. This is $1,000 setup. Imagine taking a trade here, putting your stops above this high, and then taking profit down all the way. So for instance, let's use a fib. Okay, let's use our fib and see how we are going to. So for instance, this is where you take your trades. Okay, let's use our fib. Beautifully you could see you can see. So if you took your trade at this point, this is first standard deviation and this is the second standard deviation. Look at that. Price traded into it just around the afternoon time, around 2 p.m. Price had traded into it quickly, beautifully around this 2 p.m. You would have exited the market around that time. And watch this as price trades deeper and deeper into these areas. Okay, let me put some lines here as we go ahead up. I'm going to use them to explain a few things that we need to also see going to happen on the market. Okay, beautifully this is what it is. Okay, with the fib. So price traded into. So people are wondering, why am I using fib to draw and know where you are taking profit and all that? I mean, what's the meaning of all that? Okay, we'll explain that later. All right, guys. So let's continue. So beautifully, this is an order block. But then what I wanted to emphasize is this. Yesterday, I told you that there is some signatures that also even gives you more emphasis, or it gives you more addition to giving you more detail on or reinforcing the order block, and which is this bearish candle here. This bearish candle here. This is where institutions began to place all their sell orders, and the volume of their sell orders lies inside of this particular bearish candle, as I mentioned yesterday. So before the order block, there's this bearish candle that has been formed here, has the volume. So you watch this. When price retraced back, price never traded outside of it. If price should have traded outside of it, it would have just left wicks. And here you could see that the selling, not pressure, but price was really ready to gap away or rally away quickly. So we just traded into the mean threshold of the order block, which is into the body of this particular bearish candle I'm talking about. And then quickly it rallied away. Look at how price has really rallied away from the order block. So this is one of the beautiful presentation to see how order block really works. We have price trading into, it has been raided, and then trade back into the order block. How do you identify it? Make sure that you've seen that it has taken down a long-term low, or it has broken structure. Trading back into it quickly, you know that this is an area of interest, and then you jump into the market. You can see all the rally down here. This is $1,000 trade setup, and this is one of the best trading strategies for volatility 75. It can happen on every single time frame. When you go to 5-minute time frame, you will see it happening there. When you go to 15 minutes time frame, you will see it happening there. It happens on most time frames on volatility 75 and all the volatility pairs. It happens virtually all the time. Look at this price action on 15 minutes time frame. So price actually traded into this area. This area was the order block. Can you see that? So even to have a more refined entry, you could see that price move from this high to this point to this point. So this point to all the way this point, and then price, what did price do? From this point to this point, and then to this high, and then price broke down below this low, which tells us that price has shifted course. And watch this. Afterwards, what happened? Price reversed into where? Into this particular order block. Look at where price reversed, almost into the mean threshold. It didn't close in on the gap here, almost into the mean threshold of it. And then you have a good entry with your stop even above this. This side is even giving you a more refined entry on the smaller time frame, which is the 15 minutes time frame. And you are here. Price will never trade back. Price never traded back into this area, and watch before the breakdown. All right. So beautifully, this is one of the best trading strategies you can ever have and use on volatility 75. All right. So this is just an update on what the market is doing, but then we are still expecting for price to, what I told you about over the weekend on the review was that should price break below this low, I'm expecting it to rally down and close in on this fair value gap here before we see the rally back up into the sky. All right, so basically that's all that I have for you tonight. I wish you all the best. Go and continue watch the video over and over again and gain more understanding on how to use your order blocks, and this is one of the best trading strategy for volatility 75. If you are new to the channel, please subscribe, like the video. Anytime you watch, please like the video, give me a thumbs up to even encourage me that what I'm doing is good, you know. All right, so wish you all the best in your trading. Enjoy the rest of your day. Stay blessed.